With interest rates at an all time low, a lot of folks are considering property as a form of a wealth building. Well, today on the show, we're going to take a look at is property still a good investment with all the buy to rent tenant turmoil that is ongoing?
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all around financial wellness. Here is your host, Yolanda Rose.
If it's the first time you're joining us, hello and welcome to the Wealth Nation podcast. I am Yolanda Rose, wealth coach and financial advisor, and it is my goal on this podcast and every other content that I put out on social media is to give you strategies and tips that you can use to manage your money well and to build generational wealth. So link up with us on our various social media platforms. Lots of different things happening on each platform. So make sure you're on each one. We're on Facebook, we're on Twitter, we're on YouTube, LinkedIn, and a whole bunch of Facebook groups as well, covering different types of content like the Financial Literacy for Kids group, where we focus on financial literacy for kids, the Financially Fabulous Female group, we look at investments, and Entrepreneurs by Design, we're looking at side hustles for female entrepreneurs. So go check out all of those groups, and if it relates to you, feel free to join. So, plenty happening at Financially Fabulous Females this week. On Wednesday evening, we are full steam ahead with the masterclass on the 5 investments that every South African needs. And if you are not signed up for that masterclass and you haven't received your masterclass link, go to www.financiallyfabulousfemales.com. And on the top half of the page, you're going to see a sign up button to join that masterclass, and we will send you a link. So you don't want to miss that because we're not doing that in at least another 6 months again. The Wealth Nation podcast is sponsored by Audible. Audible is a seller and producer of spoken audio entertainment, information, and educational programming on the internet. Audible sells digital audiobooks, radio and TV programs, and audio versions of magazines and newspapers. For a 30-day free trial of Audible, go to www.financiallyfabulousfemales.com/audible. So, as always on the show, we're looking at financial terminology. And today we're specifically looking at rental yields in South Africa since we are talking about property. So, a rental yield is basically it's your gross annual rental income expressed as a percentage of the property purchase price. So this is what you as a property investor can expect as a return on your investment before any taxes, maintenance, and any other deductions that can apply. So compared to other countries in Africa, Ghana, Tanzania, Madagascar, Kenya, South Africa has a rental yield of around 3.88%. Ghana is sitting at around 8.81%. And this could be due to the fact that property in South Africa is extremely overpriced. And we find with the state of property, the way it's at now, the prices are lower because demand is lower. But all in all, in my opinion, South African property is overpriced. Now, I am a property investor, and one of the deciding factors, even before I go out, before I leave my home to go out and look at a property and put in an offer, the rental yield is something I look at. And to calculate this rental yield, I would basically take the property price. I would then go into a platform like Property 24, Private Property, and look at rentals in the area for the type of property I'm looking to invest in. And then I'll calculate my annual rental rate based on that. And I'll average out and not inflate it, just be as strict as I can based on the rental because, I haven't really seen the property yet. Then I will estimate a vacancy rate. For example, let's say the property is going to stand empty for 1 or 2 months in the year. It's just to assume. And then I will factor in my expenses as well. So when it comes to the rental yield, you have the gross yield, you have the net yield. The gross yield is your yield before you, or your return before you factor in the deductions. So I have a property down the south coast in KZN. It's the very last town before the Eastern Cape border. And if you know anything about KZN, once you go north or south of Durban along the coast, it's just beach town after beach town after beach town, and each bringing its own characteristics and charm. And one is very different from the other. So mine is in Port Edward, and it's near a very popular resort that Durbanites like to frequent. So I've managed over the years to get occupancy levels at this unit. I use it as a holiday apartment for my family, and I rent it out on Airbnb and stuff. So I use it to for holiday rentals, and I've really worked hard at picking up the occupancy rate. So I'm actually getting more return now as a holiday rental than I would if I had just put a tenant in there as a residential tenant. So when I do the calculations for this investment property of mine, I take the property price, the purchase price that I bought it for. I factor in the monthly rental. I averaged it out based on my previous year's performance. I put in a 20% vacancy rate, and then I include my expenses as well. Now, when it comes to secondary property that's not your primary residence, you get a various amount of taxes that you can deduct, and we'll talk about that later in the show. But I just put in the expenses for the sake of the calculation. So on my property, I am able to get a gross yield of almost 20%. Well, exactly, it's 19.2%, which is extremely high because I bought this property very low, and I've managed to drive up the monthly rental for this property to a fairly significant rate. And then I have my net yield. The net yield is all of the deductions included: the levies, the rates, the utilities, maintenance costs, insurance costs, all of that levied in. I'm then sitting with a net yield of around 10.5%, which is phenomenal. I did tell you that South Africa has a net yield of 3.88%. So I've really worked on this property for the last 3 years, on its marketing, on its branding, on its positioning. I've really worked to get these figures. So before I go out and see a property, this is the kind of figures that I will sit and work out with. Obviously, I'll work with assumptions when it comes to expenses, vacancy rates, and rents. But until I can get a decent enough figure, I wouldn't even go out and see the property. It's not worth my time if I can't get a good enough yield or return of my investment. So that's the rental yield. That's what you should be looking at if you're looking at additional properties other than your residential property as well. Right. So if you are in the market for either a primary residence or even something on the side, some investment property, a holiday home, whatever the case is, if you are looking to get a bond to finance your property purchase, luckily for you, you are listening to me on this podcast, and I do offer bond registration services. So if you're looking for a property over 2 million Rand in South Africa, I'm here to help you back with my services. You can get maybe around 10% back of the property value over 15 years. You'll get competitive interest rates that rival private bank rates. You'll get lump sum directly to you. You get a cash lump sum directly to you that you can use for anything, from buying new curtains to settling the removal costs for your new property. And you can get up to 50% of your bond registration and your transfer fees as well. So if you want to take advantage of my bond origination services, I am linked up with some of the best companies in South Africa. So I hope that you choose me rather than somebody else to help you out, because we are giving some great incentives as well. So go to www.financiallyfabulousfemales.com/home loan. Fill in your details, and I will be in touch with you. And I'm going to get a professional to come out, see you, and hold your hand through this entire process, because it can be tedious to apply for a bond in South Africa. All right, so go and check it out. It's again, that link is www.financiallyfabulousfemales.com/home loan.
Raising financially savvy children involves teaching them a variety of skills, from budgeting to planning to earning and saving. Besides giving them an understanding of the value of a rand, it prepares them for real-world finances. Financial literacy is a vital skill, and it is never too early to teach your kids about money. Many parents wonder how they can teach their kids about money and where to find age-appropriate resources. You can now purchase the Financial Literacy for Kids workbook, which is aimed at primary school kids. It's now available at www.financiallyfabulousfemales.com. This workbook provides you with 12 lessons, activities, lesson plans, discussion points, and quizzes that you can use to test your kids' knowledge. Shop now at www.financiallyfabulousfemales.com.
Like what you hear so far? Make sure you never miss a show by subscribing on Apple Podcasts, Spotify, or Tuned In. Now back to the show.
So property. I've always believed that property is definitely a sure way for you to build wealth. There's many ways to build wealth, from paper assets to precious metals. Property is nice because it's an asset that appreciates over time. It will appreciate, and if you're looking at secondary property, or even a primary residence with additional multiple residential dwellings on it, you can get a significant amount of income that really knocks off the cost of owning a property. But some things that we forget, especially if we're new to the property industry, something that we don't realize is the price that we purchase for and the money out of our pockets are two completely different amounts, and there's such a stark difference between the two. Now, you go on a website, see a property you like, you speak to an estate agent, you see a property you like, the price is around 2 million or so. But when you factor that in with a 20-year bond, now they're giving 30-year bonds. I see on the websites, they're giving 30-year bonds. On a 2 million property, you can easily be paying almost 120, 130% extra over and above that initial 2 million rand. So you're seeing a purchase price of 2 million rand on the website, and when you do your sales and purchase agreement, but the actual money out of your account that you are paying for that property is around 4-5 million rand. And that's the thing that we need to consider when dealing with property. Now, us normal people, I'm not talking about the super rich that could be listening to this. Us normal people don't have 4-5 million in our pocket to buy a property. We're financing with the banks, with other financing companies, and even if you understand private financing as well, we're all financing our properties and our investments. So when you are purchasing property, I want you to consider this. Take the time to go and do the calculations. Play around. There's free calculators online on Property24 on private property. Play around. Look at those projections as to how much you can pay with financing over a period of 20 or 30 years. How much you can pay with additional payments over and above your bond payment. 1,000 rand extra, 2,000 rand extra can make a significant difference and reducing your loan period as well. So know that difference and go and play around and understand the various options. And the key thing, know that the price that you pay and the money out of your pocket are two completely different numbers. Another significant thing to know, if you're buying additional property, like excluding your primary residence, or unless you're buying a primary residence that's actually a multiple residential dwelling. You'll have a granny flat, a couple of granny flats, a teen pad that you can let out, and multiple rental options on that property that can actually finance your bond payments. So one of the nice things about buying property like this, additional property or multiple dwelling properties, residential dwelling properties, is the multiple income streams that it does allow. Now, property is an appreciating asset. Unlike a car, if you buy a 2 million rand car and drive it off the lot, immediately the depreciation hits almost 20%. You can't sell that car tomorrow for the same price that you bought it for today. Whereas you can with a house. And in most cases, depending on where the residential property is located, property appreciates over time. It's an extremely valuable asset. And you'll find that when it comes to the middle class, majority of the wealth is held in residential property. And if you're on this podcast and you're following my content, I want you to diversify from that. Yes, have your residential property. It's nice to be a homeowner and own something that's your own that you can leave to your children, and you're building generational wealth through property. It's great, but focus on other things as well. Paper assets, shares, equities, businesses, precious metals, diversify. So property gives you that additional cash flow where you can get other people to finance your property, and it's a depreciating asset. Unlike gold, I mean, gold is great. It's a great inflation buster, builds wealth over time, but it doesn't give you that monthly steady cash flow. So there's pros and cons to everything, and that is why we put out this content, so you know what you're investing in and why, the risks that you got to take, and your tax liabilities as well. So talking about tax liabilities, when you do have multiple dwellings in your primary residence, or if you do have a secondary property like I have my investment property, what taxes are you liable for? And now, from an estate planning perspective, there's various taxes that you are liable for on your multiple properties, and that is why, if you're investing from a business perspective, an entrepreneurial perspective, and you're building wealth that way, it might not be the best idea to hold property in your name. You'd want to look at something like a trust. If you want to know more about trust, link up with us on our YouTube channel and check out my video with Nick Steed from Capital Legacy. We really spoke in detail about trusts. And obviously, there's pros and cons when it comes to taxation and trusts as well. So there's pros and cons to everything, and we want to help you figure that out. So when it comes to the rental properties, holiday homes, B&Bs, guest houses, if you got an Airbnb for a spare room or your garden flat on your property, you have certain expenses which you are allowed to deduct from your taxable income. And these include things like rates and taxes. It's a deductible. The interest that you pay on your bond. If you're running adverts to advertise your property, if you have the property being managed by an agent for rental, those fees are all deductible from the income. Insurance. Now, this is the homeowner's insurance. It's not the contents insurance. It's the structural insurance. Garden services, all deductible. Repairs on the property, all deductible. Security and property levies, they're all deductible. So if you have a property and let's say you are making an extra 100,000 Rand a year in rental from that property, all of these expenses can be deducted. So instead of the government or SARS taxing you 100,000 on that income, you minus your taxes, you minus your rates, your interest. So it's really important here to have good record keeping when it comes to your finances. Deduct all of this. Maybe with all the deductions, that additional income is only about 50,000-60,000 rands. You do have the beauty of your property appreciating over time, which you don't really pay for right now. It's only upon sale. But all of these expenses are deducted from 100,000 Rand. Your taxable income is now 50,000-60,000 Rand. You are liable for less tax. So that's one of the nice things about the various deductions. And you got to know your taxes as well. I know it's a pain. I used to hate doing taxes. And then I realized it can save me a lot of money if I understood it and I knew it well. And I started learning about taxes and doing all these tax courses for me to understand and to better advise my clients. All right, so when it comes to those expenses, they're all tax deductible, lowering your tax liability on your additional investment properties. All right, so is property still a good investment? I think so. There's still lots of benefits. You just have to run the numbers first upon deciding what kind of property you're going for, where you need to go for. And, if you're in an area like Durban, and if you guys are familiar with Durban, wherever in the world you're listening from, the hot areas are Umhlanga and Ballito. And if you run the numbers, like the gross rental numbers in that area, it just don't make sense. And that's one of the reasons I stay away from property in that area. When it comes to investments, I go on the outskirts where property is a fraction of what you would pay, and your return is far greater. So I'm generally building wealth. I mean, I could easily sell my holiday flat down the south coast for double what I paid for it just 4 years ago. I couldn't do that if I bought property in Umhlanga, right? So it's a matter of supply and demand. It's a matter of knowing your numbers. There's lots to look at when it comes to these things. You got to be sharp with your numbers, though. All right. So that's it for this episode of the Wealth Nation podcast. Remember, if you need any assistance with setting up your bond, go to www.financiallyfabulousfemales.com/home loan. And I would love to assist you in making such a significant purchase in building your wealth. All right, so I'll chat to you soon. Don't forget, every Thursday on YouTube, there's a new episode coming out. And this week, we're going to be looking at the gross rental yield. I'm going to physically be showing you how to calculate that and what you should be looking for when it comes to rental returns in South Africa. So I'll chat to you soon and link up with us on our various social media platforms. Have an awesome one.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.